So once again, good evening, everyone. My name is Yogesh. Thank you so much for joining this session. And I welcome to all of you. The whole point of doing these webinars, we have been doing these webinars for some time now. And we started this before the pandemic. And then pandemic happened and we continue to update you, aware you about the financial markets, what's going on and what's new. So today we are going to talk about trading strategies during volatile markets. We are going to talk about pair trades, market neutral strategies, price action analysis, something which is slightly different from the conventional ideas of trading and speculation, right? So we are going to have a lot of chat. You have your chat options open already, and I would really like if you guys can continue to write whatever doubts you have, any questions you have about the topic. I'll try to answer these questions. If I'm not able to answer any questions, anyone from my team will reach you out soon and will be able to answer your questions as well. So please continue to write, use your chat option. Meanwhile, if you can hear me properly, if you can see my presentation, please send me a yes or a okay. So I would be aware that my content is visible, my voice is audible. Just want to make sure that everybody gets the best experience. Go ahead, everyone. You can use your chat options. If you can hear me properly, if you can see my presentation, please send me a yes or a okay. Perfect. Okay, that's great. Everything is smooth. So just in case if there are any congestions in the audio, or if you have to leave, or if you're not able to attend the session, uh, do not worry about this. We are going to put a recording of this on the YouTube, so later on you can always access what you have missed. The whole idea of why I love to do live sessions and I love when people come on live, because there are so many questions while we are explaining. A lot of questions emerge, and it's a very healthy discussion. I would love to do seminars now, since the impact of the pandemic has started reducing across a lot of areas. A lot of people have got vaccinated, and I hope that everybody's in good health here. So we'll continue to do a lot of seminars, but meanwhile, let's try to do webinars. Now, about trading strategies, let's understand one thing very clear. We are going to talk about a lot of strategies, but none of this gives you any kind of assurance or guarantee that you are going to generate a profit on your investment. So please, before you apply anything on your own portfolio, uh, consult to your risk experts, consult to your financial consultants, talk to your risk managers, because something which is low risk to me can be high risk to you on the possibility, on the availability of your income, your savings, your retirement planning, and everything. So please, this whatever information I'm sharing with you, it is for information purposes. Do not apply directly anything to your portfolio until you talk to your financial consultants and risk managers, right? Please continue to write your questions if you have once we start. So first thing is, why at all have a trading strategy? Why not just go with the whole speculative mode? Why we need strategy? We are always diversifying, right? I'm sure everybody knows about diversification. Everybody says that never put all your eggs in one basket, because if the basket falls, then all those eggs get broken. So you need to put all those eggs in different baskets, so just in case if one basket falls, you have some of your eggs protected. That's the whole idea with diversification. But diversification is not the end strategy, because normally this is what you feel, right? That if you diversify your investments across the mainstream asset classes, normally, let's say I'm talking about stocks, I'm talking about bonds. Most of the time, people would diversify between stocks and bonds. 60% stocks, 40% bonds, 60% bonds, 40% stocks, or somehow tweaking the composition as per your age, as per your income, as per your savings, as per your aspirations. You always diversify into mainstream asset classes. Now, while this can be a very good strategy, but then the source of return and the risk you are taking, the source of return is just two asset classes. One is stocks, one is bond, right? So you can be majorly diversified between stocks and bonds, but the source of income will still be only two sources. What you do in an environment where bonds are also falling and stock market is also crashing, because not always stocks and bonds can be correlated inversely. Sometimes they both are actually going down at the same time. So what happens to your investment? So today we are here to talk about few different kind of strategies, which is slightly different from the conventional stocks and bonds, but it does involve stocks, but a lot depends on the timing. So let's start with something known as a market neutral investing. Now, market neutral investing is something, uh, it's not a very new concept. It has existed for decades. There are traders who have done this before. Market neutral investing is something which is different from this whole stocks and bonds portfolio. So it includes investments in alternative areas. Now, how do you invest into alternative areas? So there are alternative investments which are aiming to maintain a low market risk or a very limited sensitivity to shifts in the broader market. So let's understand this. Uh, I want to make it more and more interactive, but I know that you guys cannot speak here. So let me take the poll right now. Uh, which personality had the maximum impact on the market due to its tweets? I'm just conducting a poll right now. Here and here. So I want you to answer this question, and let's say um, there you go. So I have conducted a poll right now. Which personality had the maximum impact on the financial markets, on the stock markets due to its tweets? If you have even not tracked the markets in last 4 5 years, but I'm sure everybody is well aware about what how much weightage Twitter had during last 4 years, and there was one significant personality who was connected with it. I want all of you to answer this question. Take a wild guess. I mean, absolutely, there is no right and wrong, but then uh, something which is a tad bit more interesting. Okay, it's good. It's a very good and informed crowd because a lot of you are answering the same questions. 100% votes. I'll just conduct this for 5 more seconds. 5, 4, 3, 2, 1. So single-handedly, everybody voted for Donald Trump, right? This person in last 4 years had the maximum impact on the financial markets due to its tweets. Imagine him tweeting something which may or may not be true, but at the same time, it impacted the stock markets. What does it tell you? It tells you that there's a lot of volatility, there's a lot of fluctuation in the market, and you can try to invest your money a bit into this stock, that stock, put into bonds, but volatility always uh, comes with one opportunity, but at the same time, the rationality in the market or the investor sentiment, it always gets a bit more hyped, right? It gets exaggerated when there is too much volatility. Investor sentiment, they are not able to take the right decision sometimes because there is so much fluctuation. You're not able to decide. It impacts on your thinking power. So that's what volatility does. So how market neutral investing actually works is that the whole idea of going market neutral towards that you take a strategy where you are neutral to the movement of the market. So today, if I'm telling you that take a market neutral strategy in oil, that means that oil prices can go up and down, but your trade should not get affected because of the oil prices going up and down. That's what the market neutral strategy is, and how we are going to achieve that. That's what this session is all about. So you are seeing a chart right now, a graph right now in front of you. um, on the horizontal line you see the market risk, And then on the vertical line, you see the specific security risk and the reward or the alpha. Now, if you see passive equities, now in passive equities, there is market risk is there. Anybody who thinks that I'm going to buy stocks and hold on to it forever or hold on to it for 5 years, and this way I have reduced down my market risk, you have not. Imagine what happened with Jet Airways, the company which was the #1 airliner in the world got bankrupted. So, had you bought Jet Airways stocks probably 10 years ago, just a year ago, those stocks worth zero. Or stocks like Yes Bank or any of those stocks which you had invested and went on for long and long time, went passive on your portfolio, and eventually saw that the market movements changed and the companies went bankrupt. I'm sure there are a lot of you who have made a lot of money by going passive. But one myth which I want to destroy here is that going passive on your portfolio, which means going long term and holding on to your investments, does not eliminate the market risk. It is always there. Second thing, among active equities lies moreover on the same area, just on the reward part and on the specific security part, it is slightly higher. The risk is slightly higher than the passive equities when it comes to specific security or market risk, because an active fund manager is involved. He's constantly buying and selling. So that is the one. Then let's switch on to the last, the one with green, which is called equity market neutral hedge. Now, equity market neutral strategy is where you buy one company, you short sell another company, and the market volatility does not impact your portfolio, but the relationship between those two specific stocks that affects. And how we are going to understand this relationship, I have a bunch of strategies. And before that, let me conduct one more poll, which is going to tell me something really important. Okay, right here. So add a new poll. So do you know about short selling? Okay, just answer me this question so I'll be able to understand that how engaged the room is, because the very basis of these strategies is short selling. And if you don't know about it, I'm eventually going to explain it to the room that how short selling works, just for those listeners or those viewers who are not able to understand what short selling is. But if everybody knows about it, that's not a problem. But I see that room is divided. So I'm definitely going to take an example and show you that how short selling works. And then you'll be able to understand that why these strategies are what they are, right? Okay, great. Everybody is voting really fast. It's good when there are a lot of people, uh, and there are so many people. I have to wait for their votes, but go on. I think everybody is doing it. Okay, 10 more seconds. Okay, 10, 9, 8, 7, 6, 5, 4, 3, 2. Okay, great. So 60% said no, we don't know about short selling. 40% said yes. Eventually, so let's better that I'll explain it to you very quickly on my live trading platform that how short selling works. Because the basis of every strategy here, when we talk about market neutral investing, especially trading strategies of market neutral, we have to understand how short selling works before we switch on to any other strategy. So I'm going to share my live platform with you. Here it is, trade room. Century 1, 2, 3, 4, 5. And sorry. There. Now, okay, let me just take one more. So it's very easy. I'm just doing it again for you to tell you how easy it is to log into the live platform. All you have to do is go to the web link. There's an app available. Just type a demo account. This is my demo account. And Password is century12345, and then you log in and you get to the live account. Here it is. Now here you will see all the asset classes which are available, and this is my money, $100,000. Please ask any questions you like to. I hope everybody can see the screen properly. If you have any doubts, please go ahead and ask your questions. Now, what I'm showing you right now, this is a live platform. Okay, the prices, what you will see, whether it is gold, oil, everything, these are live price movements. Right now, what you see in your screen is the kind of asset classes which we have, which you can invest into. The $100,000 account value on the top right corner is the dummy equity which I have put in this particular trading account. When I say equity, that means dummy cash which I have put in this account. Now, very quickly, I'm going to explain you how short selling works. Short selling requires a broker, which is the platform which you see right now. It requires a person like you or me who wants to do a short selling transaction, and it involves market which has buyers and sellers. What short selling is a way of making money when the markets are falling. I should not say making money, I should say short selling is the process by which an investor anticipates to generate profit from the falling market, right? So when the prices are going down, you know what to do. When prices are going up, you buy the product, it goes up, you make money, right? It's easy transaction. But what's going on when prices are coming down? That's where short selling comes in. And how it works out, let me show you right now. So in short selling, all you have to do is reach out to your broker and borrow the commodity or borrow the stock which you are expecting that the price will fall. Okay, now use your chat options and write the name of the company and keep it US based, because I have a very it's a demo account, so the product library has demo US shares active. uh, a US company which you don't like, which you feel that is inflated, overpriced, the price will come down, just write the name of the company. So I'll take your examples and show you how shortling works and how you can try to generate profits from the following market, or how you can try to take advantage of the falling markets. Write the name of a company which you don't like, and I'll take a live example. Keep it US based. Use your chat options to do that. Right, I'm getting different names here. Unfortunately, I'm going to take one or two companies. So keep writing. Any company which you think is overpriced right now, might come down, not a good buy at the moment. McDonald's, Amazon, whichever you feel like. Go ahead. Okay, right, right. Great, perfect. So, okay, surprisingly, a lot of you have talked about Tesla, which is which I'm not surprised about, because um, everybody has, they always feel that Tesla is overpriced. So, and it's a tech stock, so nothing wrong with it. Okay, so I'll take Tesla and I'll show you that if you feel that Tesla is overpriced and is going to come down, what you need to do. Okay, so here's the thing: you search Tesla, the price opens here. Okay, right now, tell me what is the price of a Tesla stock? It is right open. Just trying to make it more interactive, guys. If I have to buy one share of Tesla, or let's make it more interesting, if I have to buy 10 shares of Tesla, how much money I need to have if I have to buy 10 shares of Tesla? Write your answers on the chat. If I have to buy 10 shares of Tesla, how much money I should have? Okay, okay. Surprisingly, answers all of them in one sync. Don't worry about the exact figure. Just go ahead with it. Okay, perfect, perfect. Perfect. Okay, perfect. Answer is almost the same. It's not uh, because it's constantly moving. So the price what you see right now, it's a real time price. Okay. So yeah, perfect. So most of you have sent $8,000, 8,100, 8,080. How do you calculate that? Because one share of Tesla is $808. So if you want to buy 10 shares of Tesla, you need to have 8,100 or $8,080 to be precise, right? Now, this is when you want to buy. Now, I'm talking about short selling, how short selling would work. Short selling is very simple. Now, if you're expecting that the price of Tesla will come down, what you have to do is you have to talk to your broker, and I'm telling you a very raw process. Okay, that's not how it works, but I'm breaking it down for you. You have to reach out to your broker and tell him that, hey, I want to borrow, say, one share of Tesla. Okay, and the price of one share of Tesla, the selling price, which is mentioned here on the platform. So this is buying price. When this becomes orange, this is the selling price. So you are telling your broker that I want to borrow one share of Tesla from your inventory and I want to sell it live in the market. Okay. Once again, you are telling your broker when you open this order ticket, this is called order ticket, the price, that I want to borrow one share of Tesla from you. You are telling this to your broker that I want to borrow one share of Tesla from you and I want to borrow it so that I can sell it live in the market. Think about this for just 2 seconds. What I just said. You don't have Tesla shares, but you want to sell it live in the market. How will you sell it? You will borrow from your broker. Once again, I want everybody on this. Once you understand short selling, the strategies will be so amazing and it will be so easy. Now, tell me once again, you don't have Tesla shares with you, but you want to sell it in the market. How will you sell it? Use your chat options to write this. I know it's a very teacher student module, but trust me, webinars are um, very competitive in nature. I really have to work too hard to keep your interest alive because finance as it is really boring. So tell me, if you want to sell Tesla shares and you don't have it, how will you sell it? How can you sell something which you don't have with you? In case of financial markets, how will you do it? I just told you. Use your chat options to write. Okay. Okay. So a lot of you are writing this, which is really good. Okay, perfect. Perfect. Okay, now finally I started getting attention. People have started writing it. Very good. Very good. Absolutely. The answer is borrow it from the broker. So the point is you call your broker, you borrow it. So you borrow it and you sell it in the market. Now, if you have a notepad with you, I would always suggest keep a notepad so you can write important things down. Imagine and do this in your notebook, okay? If you borrow one share from your broker and sell it in the market, how much money you will receive? Write your answers in the chat option. If you borrow one share of Tesla from your broker and sell it in the live market, how much money will you receive? Tell me. So you did amazing when you answered my question that you borrow from the broker, right? Now answer my another question. When you borrow from your broker and sell it in the market, one share of Tesla, how much money will you receive? How much money you should receive when you sell it? Just try to answer this question. Perfect. Okay, great. People have started. Okay, continue. For those people who are not participating at all, I really request you to do this. It will rise your interest and you will know that how you can take advantage of the falling markets. So far, we have reached on borrowing the share from the broker, selling it in the market. And when you sell it in the market, how much money you receive? $808 because that's the selling price, right? Now, if you have a notepad with you, I want you to write in your bank account you receive, and again, all of this is hypothetical, sir. You're receiving on your trading account plus 808, whatever is the current selling price. Now it is 809. So when you are borrowing from the broker and selling into the market, you are getting $809, $808, whatever is the selling price, right? You're receiving that. Put a big plus. Now, I legit want you to close your eyes and imagine Tesla shares falling. And Tesla share has fallen down from $808 to $800 per share. I'm going to give you a minute to process it. You borrowed from your broker the one share of Tesla, you sold it live in the market. Somebody bought it from you and gave you $809 because that was the selling price. Now I'm telling you, you got that 809, you slipped in, you kept it with you, okay? And now the price of Tesla has come down from $809 to $800. Anyone who's listening right now, what should be your next step if Tesla has fallen down to $800 now? What should be your next step? You have to write this on your chat option so I make sure that everybody understands this. You borrowed from your broker, you sold it in the live market, you received $809. Now the share price of Tesla has gone down to 800. How you can make profit from this? What should be your next step? Tell me. Okay, I started getting responses. I just want everybody to be on the same page. Okay, somebody said, I will give it back. So when you say give it back, what will you give it back? Be very, very specific. So I want to make sure that you understand this. How will you give it back? Okay, I will buy. So somebody said, I will buy and sell to the broker volume of the shares. So just so I know that you will buy the share back, right? So when you say you will buy and sell, basically you will buy and give it back to the broker. So you borrowed it from the broker and sold it in the market. You received $809. And then when stock price went down to 800, you took out that 809, paid 800 out of it, right? And bought that one share and gave it back to your broker whom you borrowed from, and you made $9 profit. There's another answer. Hold on with the share. Don't sell when it is down. So there is one important thing. I think you joined slightly late. We are already selling the share. So we borrowed from the broker. So we are talking about short selling, something which is used when stock prices are high and you're expecting them to drop. So how to take advantage of that time? You borrow the share from the broker's inventory, sell it in the market, and when price comes down, buy it back at a cheaper price, and that price difference is your profit while you give back what you borrowed. So I'm going to do this now live in the platform. Just do see this. So this is Tesla. I have $100,000. I write $100,000 in the amount, which will account to 123 shares of Tesla. This is short sell. So I'm selling it. All those who have joined right now, how I can sell something which I don't have with me? By borrowing it from the broker's inventory. So when I'm actually punching the order right now, I am borrowing from my broker and selling it live. Right now, there is a market, there's a buyer in the market who is ready to buy at the price I'm selling right now. So $100,000 for Tesla, I click on sell. Now see, this shows that you sold Tesla Motors. If I go to my positions here, it tells me that I see this S. S stands for short sell. I sold 123 shares of Tesla. Now, how will I make profit? As many of you pointed out right now. See, I have a $3 profit right now. It's fluctuating, it's moving. Why? Because my selling price is 809 and current buying price is 808.85. So my buying price has come down, which means I sold it at a higher price. Now I can buy it at a cheaper price, keep the difference with me, and give back the stock which I borrowed from the broker. Look, right now I have a profit of $40. How do I have a profit of $40 right now on this account? Because my selling price is See this? My selling price is 809. Let me turn the whiteboard on so it should be clear. See this? Yellow. 809. This is my selling price. Look at my buying price, 808.54, which means I borrowed from the broker, sold it at a higher price, and now when the price has come down, I can buy it back and book $113, $120 profit. See, this is going up, right? Now let me show you how you do that. Just go here, click on close trade, and now you buy it back. But when you buy it back, you don't keep it with you. It automatically goes to the broker because you borrowed from the broker, so it goes back to the broker. So you close your sell trade. See, your account value now from $100,000 has come to 100,101. That's the profit which is added. You made money from the falling prices. This is called short selling. Okay. Why this is important to know? Because the next thing which I'm going to talk about is called pair trading, which requires short selling one stock and buying another, right? So I'm going to talk about that kind of strategy. If you want to know more about short selling or what I just did, I'm ready to for a one-on-one session later on, and we'll always discuss about this, right? So let me just get back to my presentation, and please keep writing if you have any questions. I'm more than happy to answer. Now, how market neutral investing works? It works firstly in the form of a pair trading. So why it was important for me to tell you what short selling is? Because a pair trade works on a concept of short selling. What pair trading is, see, in a nutshell, pair trading works by anticipating that two or more securities, and when I say securities, that means two or more shares or two or more commodities, they will either diverge or converge in price. Okay. When I say diverge or converge, which means either they will come closer, their price difference will come closer, or the price difference will go wider. Answer this question in the chat. Okay, there's one question. So does this mean that any sell is short selling? This is a very important thing. When I say short selling, that means it is short selling. Otherwise, if you buy something and you want to sell it and make a profit, that is your actual selling, right? That you bought something and sell it. A sell is a short sell when you start your trade with it, right? Because normally how you start your trade, you buy something, the price goes up, you sell it and book a profit. But when the price is already too high and you are anticipating a decline, and then when you start your trade with a sell by borrowing it from the broker, that process is called, that sell will be a short sell. Means sell and next buy for the same stock. Yeah, so you sell first and then you buy later. Again, we can have more and more examples. I'm going to execute some strategies over here, so you can do that. Now tell me, use your chats to answer this. When I say I'll take one company's name, and you have to write the first thing which comes into your mind, the very closest company which comes into your mind. Okay. Okay. Here's the thing. Pepsi. When I say Pepsi, which is the next company closest to Pepsi which comes into your mind? Write it on the chat option. You'll be amazed at how human brains work at the same time. When I say Pepsi, which is the next immediate company comes into your mind? Absolutely relatable, exactly same, just like Pepsi. Which other company do you think? I'm going to take some examples like this. I'm going to explain you how a pair trading would work. Okay. 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 So almost everybody said Coca-Cola, right? Because I say Pepsi, the next thing comes into your mind is Coca-Cola. Somebody did say thumbs up in all fairness, but I'm sure a lot of you will always think about Coca-Cola, like Pepsi and Coca-Cola. Now, these two are listed companies in the stock market. Their price movement also most of the time walks into the similar direction, right? Because, okay, think about when I say MasterCard, which is the next closest company comes into your mind when I say MasterCard? Go for it, guys. Use your chat option. So I'm just trying to show you that how two companies can be so relatable that their price movement also is working in the similar direction. They are so correlated because they have the same target market, they have the same product, they have the same geographical location, same regulation, and same challenges, right? So whenever I say MasterCard, the next company immediately comes into your mind is Visa. So you'll be surprised to know that most of the time, the prices, the stock prices of these companies, they move in the similar direction. So if Pepsi is going higher, you will see Coca-Cola is also going higher most of the time. Or if both of them are going down or both of them are going up. Same goes with MasterCard and Visa because both of them have the same target market, have the same audience, have the same regulations, same challenges. It's not like something which is allowed for MasterCard is not allowed for Visa. It's almost the same company. Imagine that there was Pepsi and Coca-Cola moving in the same direction. This is Pepsi, this is Coca-Cola. Now imagine that Pepsi's earnings result came out and they were very good. So Pepsi started going higher. At the same time, the news came that Coca-Cola's CEO is stepping down. Or let's take a better example. How many of you remember that when Ronaldo conducted a press conference, he came and he saw Coca-Cola kept in the front of his desk, and he removed Coca-Cola and said that stop drinking Coca-Cola, drink water. That time, that very single day, the stock price of Coca-Cola went down by 4%, right? So imagine that Pepsi had very good earnings, or Pepsi went up, but due to Ronaldo, the Coca-Cola prices went down. Now see what is happening. There's a divergence, right? Everybody can see there's a divergence because earlier this gap was this much. It was moving the same direction, Pepsi and Coca-Cola, same direction. But now Pepsi goes higher and Coca-Cola is down. So there's a divergence created, something which is an exception, something which mostly never happens because these two companies are really relatable. But due to market anomalies and events, this has happened. Now, this is where the opportunity kicks in because now what you have to do is you have to short sell Pepsi here because it has gone up, it has outperformed. So you short sell Pepsi and buy Coca-Cola because this anomaly is not going to last. People are traders are going to take advantage of this market anomaly, and eventually, like an elastic, this gap will come back. When this gap will come back, either this will come down, which you are on the short sell, so you make a profit, or this will go up, which you are on the buying side and you will make profit. Now, while this is going on, it doesn't matter Donald Trump is tweeting, it doesn't matter a pandemic is going on. Your portfolio, if you have used this strategy, your portfolio does not get impacted by the prices of these stock markets. Your portfolio gets impacted. How? That if this gap between Pepsi and Coca-Cola becomes bigger, that's where your loss is, right? But if it comes back like it is always to the mean to the average ratio, that's where you make the profit. This is called pair trading. I'm sure a lot of you have been approached by a lot of companies talking about we'll give you market signals, trading signals. All right, all of that is great. You can speculate all you want. Uh, you can buy, keep a stop loss, the right way to do it. You can always buy some stocks and hold on to it for the longest period of time. So I'm not here to shake your existing portfolios and your existing arrangements. I'm here to show you something different, which is used by the hedge funds to curb down the market volatility because mitigating risk is the most important part, right? That's how a pair trading strategy would work. I'll use this. Let me show you how would you execute what I just said about Pepsi and Coca-Cola. Let me share the screen with you right here. Look at this. So all I have to do is search Pepsi. Okay, right here. This is Pepsi, and then comes Coca-Cola. Where is Coca-Cola? Coca-Cola. I'm just moving this 1 second. Okay. Here, Coca-Cola company. Here. Let me see today. So here, just look at this. Look at this. I hope everybody can see my screen. Can everybody can see my screen? Yes. Let me just zoom this particular part. I want to show you this. Okay. See this. Today, Coca-Cola here is down. Where is it? Sorry. Screen share is on. Whiteboard here. Okay. Color is red. Look at this. Today, Coca-Cola is down by 0.4%. Everybody can see this. And Pepsi is down by 0.1%, right? So one thing which is clear, both of them trending downside as of now. Now, if I have to take advantage of this gap, because look at this, Coca-Cola is down by 0.4%, okay? Look at this gap, all right? Coca-Cola is down by 0.4%, while Pepsi is down by just 0.1%, which means either Pepsi should go down more or Coca-Cola should recover and reach to this level, which means Pepsi is outperforming right now. Pepsi is down less than Coca-Cola. So all we have to do is short sell Pepsi and buy Coca-Cola. Now, somebody asked the question that how much quantity? So it has to be done in equal value because one share of Coca-Cola is $54, but one share of Pepsi is $156. So you cannot do a pair trade in number of shares. You have to do it by equal value. All you have to do right now is I've already opened this. So if I have to short sell Pepsi, because Pepsi is down less, Coca-Cola is down more. So either Coca-Cola will recover. So I want to buy Coca-Cola, and or Pepsi will go down more towards Coca-Cola. So I have to short sell Pepsi. So what I do is, let's say I have $100,000, $50,000 short sell Pepsi. I write the amount here, $50,000 buy Tesla, buy Coca-Cola. Sorry, I click here on buy, done, sell, done. See, this is my pair trade going on right now. I bought $50,000 worth Coca-Cola. I short sell Pepsi, and all I'm looking at right now is, so all I have to do is wait till I receive a net profit. Please understand this. So an important part about pair trading is to realize when to get out, because a lot of investors, what they do, and I'm sure we might get stuck into this. So please understand this. A lot of investors, what they do, the moment they see one leg is in profit, they book that profit and keep the other leg open. That's not pair trading. That is speculation. You will see loss in one leg and profit in another because they both are relatable companies. The profit booking happens in this when you have a net profit, when the profit in one stock is higher than the loss in another, right? So this is how. And please remember this, that currently I have entered into this trade. This is not normally how you just calculate your price difference, because I said that Pepsi is down by 0.15%, Coca-Cola is down by 0.4%. So let's enter. Normally you don't enter at only this much gap. So what the researchers and what the analysts are doing here at Century, they are calculating this on the basis of standard deviation, and the deviation of these prices from the average mean. That if the average distance between Pepsi and Coca-Cola prices is this much, okay, then what should be the entry point? Should entry be at this gap, or at this gap, or at this gap, right? That gap is historically studied, and that's where the consultants are able to create these strategies which we provided to the clients, that that is the right time to enter. So if you are thinking that do we need to put our brains and understand that when we have to enter, there are consultants who can always guide you towards it, right? That this is the right time. Again, how much quantity you have to do it, what time, how much long you can hold it, that depends on your risk appetite. Okay, if you do not want to take too much risk, keep your position smaller. If you're okay taking a higher risk, it's up to you. But please consult your risk managers and take care of your risk appetite before you take any decision. So you will see pair trade does not just comes in profit like that. Sometimes you might have to hold on to this trade for a longer period of time. Sometimes it works out, right? So this is one strategy. Again, now like this, how we have created is this is one hypothetical Pepsi Coca-Cola. I gave it to you. Now let's understand some of the pair trades, how it works, and some of these strategies which could really uh, be a good idea. Just one second. Let me show this to you. Okay, sharing my screen, window. Perfect. So something which is going on right now here. Okay, I hope everybody can see my screen currently here. I'm showing you two indices, Japan 225, Australia 200. Very quickly, answer in your chat options. When I say Japan 225, what does 225 means? Look at the flyer. It says Japan 225. What does the number 225 means? Take a guess. I'm telling you, it's a stock market index. It tracks the performance of a bunch of Japanese companies, okay, how they are performing, and the index moves on the performance of these companies. So if I say Japan 225, take a guess, what does 225 stands for in a stock market index? By all means, you can Google it. Please do not shy away. Better you search yourself. You will get a better idea and you will always be able to remember it. Go for it, guys. Go for it. When I say Japan 225 or Australia 200, what does 225 and 200, what does it stand for? Okay. Okay. Started getting answers now. Okay. Perfect. Great. Great. Okay. So most of you said it right. Some of you are a little confused here, but no problem. So most of you said the number of companies which this index is tracking, right? Absolutely correct. So when I said Japan 225, these are 225 Japanese companies, okay, which are tracked by this index. So the way these 225 Japanese companies perform, the index Japan 225 will move in that direction. So good part for you is you get to invest into the whole index, into that basket of 225 companies. So your risk is mitigated into different sectors because these 225 companies can belong to different sectors. Similarly, Australia 200 is a Australian stock market index, and these 200 companies are 200 Australian companies. So if you need exposure in Japanese stock market, the best way to do this is through an index, Japan 225. If you need exposure in Australian market, then Australian 200. Now, there's a pair trade going on between Japan and Australian stock markets. And how this is working out, I told you about pair trade. I gave you examples like Coca-Cola, MasterCard, Visa, Pepsi and Coca-Cola, MasterCard and Visa. And here I'm talking about Japan and Australia, right? So the first question which comes into your mind is that these two are completely different indices. Like Japan is somewhere else, Australia is somewhere else. Why we are having these two instruments connected? I'll give you a rationale behind this. So how this actually works is, just give me one second. Okay, now here's the thing. The idea is to go long on Japan, which means to buy a Japanese index and short sell Australia. Now, the reason is Japanese, they are world leaders in manufacturing electrical appliances, automobiles, ships, machine tools, machinery, chemicals. Economy is set to reopen in full swing, and Japan has forecasted that the economy will expand by 1.7%, right? Uh, Now, there has been a lot of mining. Now, let's focus on Australian economy. There has been a lot of mining in Australia for iron ore and coal, and Australia's largest source of export revenue is iron ore and coal. Okay. In 2020, the growth was spurred by a soaring demand for commodities worldwide, and that's why the Australian equities also went higher. Now, at this point of time, due to the Evergrande collapse, Evergrande was one of the most important property developer of China, one of the largest, and due to its collapse, China is going through a hard phase because the real estate market is about to get affected. It's a bad news for Australian exports because China and Australia are major exporting partners, right? Also, there is a lot of export from Australia which goes to China in terms of commodity, steel production, and everything. Iron ore, for that example. So, because of the impact on the real estate market, there is the possibility the demand from China will be less and Australian exports will suffer. So, you short sell Australia index and you buy Japanese index where the economy is expected to grow faster, coming back from its pandemic crisis, getting into the global recovery. And again, the Japanese companies are receiving a lot of foreign inflows as hopes of a stronger government and expectation of fresh economic stimulus, which has boosted the investor optimism, right? Makes sense, right? That you go long on Japan, which means you buy Japanese index and you short sell Australia. In this case, what happens? Global equities can get affected because I'm also showing you right now on this while we are talking. Look, something really important here. Check this out. This is a chart. This is a chart of what? This is a chart of the price ratio between Japan and Australia. If you see Japan's prices divided by Australian index prices, and you will see the ratio of those prices. So this chart is the chart of not the price of Japan or price of Australia. This chart is the price ratio of the Japanese and the Australian. How do you find ratio of anything? You divide the price of one with the price of another. So you divide the price of Japan to Australia and you will see that their price ratio also has started going up, which means if you buy Japan and short sell Australia, which we are expecting that Australia will go down and Japan will go up, their price ratio will also increase, which reflects on the chart that is expected to go higher after bottoming it out in 2011. So this is again something which we can always look at as a part of a strategy, right? This is index composition. Most of the Japanese indices, they have industrials. Here, the Japan index has majority percentages on industrials. Australian majority percentage is in financials, right? So there is a lot of issues going on between China and Australia, leading, we are expecting an economic slowdown for the Australian index, where a long strategy, which means buying Japanese index. Again, guys, as I said, this is for your information. So if you have your long-term portfolio, I'm not telling you to take money out and put in this. But now I'm giving you an extra leg that while your investments are already at different places, strategy-based investments in volatile markets, this is something which you can always go for. Is it risk-free? No. Is there an assurance that you will always make money? No. This is just like any other investment, but this is something slightly unique because this is where we form these strategies on the basis of the current market volatility. It is aimed to reduce down your risk. I'll give you one more examples of this, okay, because this is something which is really interesting. Something we have coined the term as a NASA strategy, and NASA strategy is, it is, we talk about it a lot. A lot of people have been using it, and let me show this to you how it works here. Look here. So we are still talking about a pair trade, right? There are a lot of pairs. Trust me, there are a lot of pairs. There's natural gas and oil. There is Brent oil and WTI oil. There is Nasdaq and South Africa, Japan, and there are a lot of pair trades which are going on right now. So you talk to your relationship manager who have assigned you the trading this particular idea, this particular webinar who have signed up you for, and they will give you even the strategies which you can always look into, right? So here I'm showing you a pair trade between Nasdaq and South Africa. Now this is something which is really unique. Look at this. So one by one, look here. Okay, I will show you one chart and focus on this chart as I tell you. Okay, I'm zooming this in. Okay, right here. And here's my chart. Look at this. Now, first thing I want you to focus on only this. Nasdaq's yearly return from 2008 till 2021, a year till date it's going on. Just focus on this column. Right here. Tell me how many times Nasdaq have shown negative returns in last 12 years, which is 2008 till date. Write your answer to the chat option. Look at this Nasdaq's yearly return every year and tell me that how many times Nasdaq has shown a negative return. Which means every year, if you just buy Nasdaq and hold on to it, this is the percentage return which you will make. Okay. Imagine you have been doing this in 2008, 2009, 2010 till 2021. How many times Nasdaq has showed negative returns? Write it on your chat options. Okay, go for it, guys. Okay, okay, okay. Just check this. I hope this is visible to everyone. Look for negative returns. How many times Nasdaq has shown negative returns? You will be amazed to see what happens next. Negative returns. How many times Nasdaq has shown negative returns? Please see this once again. How from 2008 till 2021, how many times Nasdaq has shown negative yearly returns? When I say negative, which means if you had put money, you would have lost. Check once again. If you understand this, 90% of the session is fruitful because I want to convey a message through this. So a lot of you have answered. Um, the correct answer is 2 times right here. In 2018, when Nasdaq showed minus 1.6%. So if you had entered in the beginning of 2018 and exited by the end of 2018, you would have lost minus 1.6%. And in 2008, minus 42%. So 2 times Nasdaq has shown negative returns. In how many years? In last 12 years, Nasdaq has shown negative returns 2 times. So first thing, now you are thinking, okay, then why should I work hard so much? Just let me put my money in Nasdaq. Most of the time it has shown positive returns. 10 out of 12 times it has showed positive returns. Then why I'm working so hard to find out different avenues for investment? Now, forget about this column. Look at South African economy and look at the yearly return of South Africa from 2008 and answer me the same question. How many times South Africa has shown negative return? Look at it. Just focus on this column. That's it. Don't look at anything else. Tell me how many times South Africa has shown negative returns. I am trying to prove a point here. So let's say first, second, third, and fourth. right? Absolutely right. Those who said 4 times, you're absolutely right. South Africa has shown negative returns 4 times. Okay, now here's the thing. What I'm doing is, imagine if I have bought NASDAQ and short sell South Africa. Short selling means that if South Africa goes down, you will make money out of it. If NASDAQ goes up, you will make money out of it. So in last 12 years, if I bought NASDAQ equal value and short sell South Africa equal value, how many times this strategy has shown negative return? Discount 2021 here, okay, because it's not ended yet. Let's see, because this strategy is updated 3 months ago. We are still updating it. But from 2008 till 2020, if you were buy on NASDAQ and short sell on South Africa, how many times you would see negative returns till 2020? Don't count 2021 right now because the numbers are still yet to come. How many times would you have seen negative returns? If you buy NASDAQ, short sell, I'll give you one example. If you had bought NASDAQ in 2008, okay, if you had bought NASDAQ, you will lose 42%. But if you short sell South Africa, you will make 26% because short selling is when price comes down, you get benefited. Remember? So if you short sell South Africa, you will make 26%. But if you bought NASDAQ, you lose 42%. So your net loss is 16%. If you only invested in NASDAQ, you would have lost 42%. If you have only invested in South Africa, you would have lost 26%. But if you had bought NASDAQ and short sell South Africa, you would lose 16%, which is still less than the individual investments had you done. That is what market neutral strategy is all about. The market neutral strategy is trying to mitigate your losses by combining pairs where you buy one and short sell another. Okay, so 2 times, if the entire 11 years, 2 times you had faced negative returns, and even those negative returns here, right here, these are aimed at providing a more, the word I should use is relatively less volatile outlook, right? So basically, the idea is when you use something like this, when you use a market neutral strategy, you are mostly stressing on reducing down your risk in the middle of this volatility, which is really important in the times like now, right? I'm more than happy to talk more on this strategy, but let's, before I end the session, let me show you a few more strategies which are really, really good, and we are working on it. Let me clear this. And please keep writing if you have any questions. Something called seasonality analysis, right? Seasonality analysis, something really interesting. Look at this. I have something really open here. This strategy was made on 4th of August. Okay, this is mostly we do month on month. Just look at this. Slightly, let me zoom in. Okay, here. So, unfortunately, I'm sure a lot of you are not able to see this properly. Just see it this way, that on the top horizontal, Jan, Feb, March, April, May, June, Jan to December, the months are mentioned. And on the left vertical, the 2011 till 2021, last 10 years, every year, every month. The red stands for monthly returns, which is negative. The green stands for monthly returns when they are positive, right? Now, just look at this. Look at this table. If you have to buy natural gas, which would be the best month to buy natural gas? Just look at this chart. Don't stress on the highlighted month, okay? I want you to stress on this chart and tell me that which should be the best month to buy natural gas. Start from your left: Jan, Feb, March, April, May, June, July, August, September, October, November, December. You look at all these months and then you look, see for how many years they have shown positive or negative returns. Tell me that which do you think is the most best time to buy natural gas in terms of which month? This is called a seasonality strategy. So I showed you a pair strategy. I'm showing you a seasonality strategy. See this. Check this out. Tell me, use your chat option and tell me which is the best month starting from your left, starts with January, February, March, April, May. Tell me which month do you think is the best month to buy natural gas? Okay, start getting answers. All of you, anybody who's not participating now, if you're still there, this is amazing session for you. I will repeat this once again whenever you like to one on one, but trust me, what we are discussing right now live is the best. So tell me, which month do you think is best? Okay, everybody's participating. I love this. Everybody's participating now. Absolutely. So a lot of you pointed it out. In spite of me highlighting a different month, all of you pointed it out, April. Why? Because you can see that in last 10 years, April single-handedly has been green most of the time, which means in last 10 years, every time in April, the monthly returns most of the time are positive, except one. This is called seasonality strategy. So what we do is we go back last 10 years and we find out the monthly returns of commodities, different kinds of commodities. Seasonalities can be done on rice, wheat, sugar, coffee, natural gas, oil, lot of things. And these seasonalities studied. And then we reach to a point that, okay, this month, most of the time has been, majority of the time has been good, right? So this is something which is seasonality strategy. Imagine now, had you known this earlier, an extra leg of your investment month on month would go. If most of the time there is a month which is red, let's say 10 times red, then you don't have to buy, but you can always short sell because you know that natural gas prices fall in that particular month. So you don't have to buy, you can short sell. So you can try to take advantage of the falling prices using short selling, right? This is called seasonality strategy. So again, as I said, strategies, there are a lot of strategies which are going on right now. We are always working interest earning ideas, interesting ideas, which I saw Nasdaq and South Africa, which you just saw, right? Where you long, go short. There is a certain amount of interest component which also you get, something which we can discuss later on because this is something which is a bit more complex, but I will always be more than happy to discuss it with you. Uh, Sometimes there are different classes of shares. Okay, like there is alphabet A, alphabet C, multi-class trading. So alphabet A, alphabet C, there are two different classes of shares, and you buy one and you short sell another because sometimes the gap between them increases and it will come back because it's an arbitrage opportunity. So you can always trade on different classes also. Coming to the point, is there any risk? Of course it is, because there is nothing which is without risk. Sometimes the gap is this much, it went wider, you entered, but it continued to go more wider, right? So you might end up making a loss or you wouldn't know what to do. So that's where the risk factor comes in. But that's why the entry and exits are of key importance. You always talk to your risk experts before you enter into these trades and try to find the best entry and the best exit. And do not shy away from booking your losses. Guys, this is something which is really important. Any form of investment, do not shy away from booking your loss, because if you have a part in your body which has caught up a disease and it's getting worse day by day, there will be a time where if you're not able to get rid of the disease, you might have to just cut that part of your body because it is affecting your entire health. Don't wait till it gets worse. You have to go to the doctor, take the pill, and get rid of it. So basically, portfolios are just like that. If you have a bad trade, you have to get rid of it. Talk to your experts and see that what's the best time to get out, whether in profit or loss, right? There is one more strategy which is going on these days called price action analysis. Before I finish this, I would love to show this to you because this is one of the best things which we should definitely look at. Look at this. Price action analysis. Now, price action analysis for those people who look at the stocks specifically and the earning season, because uh, earning season is the time when stocks move a lot after the earning results come out. October is the earning season. In fact, after 2 days, Wells Fargo and other financial companies will start. So this is a flyer which we made last quarter. And how we use the earnings is just look at this. Okay, here. Okay. Now I'm taking two of them, Expedia and Tyson. Just look at Expedia right now. Screen sharing on, whiteboard, and look at this. See this. Expedia earning date is August 6th. Like when we made this, it was August 6th. So what we did, it was a second quarter earnings. So we did an analysis of last 10 years, same quarter, second quarter. And we analyzed that if you enter day before the earning comes out and exit on the day of earnings after the market, after the earning is declared with Expedia, you will see that the probability of gain in price, barring these three areas, is 70%. But at the same time, if you enter on the day of earnings and hold the stock for entire 1 month, the probability of gain in price is just 20%. Because most of the time, the price goes in the downward direction after the earnings come out. And if you're holding the stock for 1 month, just look at this. So definitely, I'm not going to buy this, but I can always go for short sell if I have to take a monthly call, but be on the buying side if I have to take a daily call, right? This is how price action analysis works in the earning season. Guys, this is not something which people do because they are not aware about it. Mostly what people will do, everybody's talking about how Expedia is going to come up with positive earnings. Let's just go for a buy and see. This is the worst thing you can do with your portfolio, that just guess what will be the earning and go for it. You should always monitor that if this is second quarter earnings, then in last 10 years, every second quarter after the earnings have come out, whether the stock prices have gone up during the day or have gone down during the month. This helps you identify whether you should go for a buy or a sell. This price action analysis we do for a lot of stocks. We do every quarter when the earnings comes out, and this is something which can always be. So see what I'm giving it to you right now. Apart from your existing investments, I'm giving you these seasonality pattern strategies, price action analysis. I'm giving you pair trading strategies. Again, depending on your risk understanding, whatever you like to do, you can. But this is something which is available to you. Now, before you leave and before I end this session, something which is going on right now, and I should be sharing this with you. Um, the current energy crunch which has started. I'm sure a lot of you must have heard about the natural gas prices surge which has happened. So this is something which we recently prepared, and I think we need to address what's going on right now. So natural gas has long been oil's neglected step cousin. However, currently it's playing the lead role in the energy crunch drama that is gradually dragging down the world economy. The price has surged massively for natural gas and coal and propane, and that's why the global factory production has lowered, and it could drive electricity and heating prices sky higher this winter. So several factors came together to drain natural gas supplies. An extended cold winter in 2020 in US and Europe, right? So a lot of supply of natural gas was used. So there is a lot of energy crunch which is going on right now. Uh, During the pandemic induced many drillers, they stopped the production. So that is also adding to the supply crunch. Uh, a hurricane in August temporarily knocked out the gas drilling in the Gulf of Mexico. So the electricity generation was below average. All of this has been going on, and there is a reason why the US natural gas prices have gone up. Now these are the stocks. This is where we reach to the point. These are the stocks which currently can be considered to play on the worldwide energy crunch. You can click a picture, write it down, or ask your RM, they will send it to you. Coterra Energy, Marathon Oil, Schlumberger, ConocoPhillips, Halliburton, Chenry Energy, ExxonMobil, Royal Dutch Shell, Chevron, Total Energies, NESPA, BPPLC, and a lot of these companies, they give you actually really good dividends, right? These are energy-based companies. Look at their last 1 month return, guys. So look at this. Somebody asked the question that we doesn't know that when the quarter reports will be released. No, you can go to Nasdaq earnings calendar and you can know that which results are going to come when, and we'll send you the price action analysis for those companies. So no need to worry. That's where we come into the picture. Look at these companies. You can play around with the recent energy crunch. Look at this. And a lot of these companies like Total, BP, they give you Royal Dutch Shell, Chevron, they give you good dividends also, right? And look at their last 1 month returns, right? So there are Bloomberg price targets as well. Sorry, not this. I think, where are the targets? Yeah, here. So this is the current price right now, the current price and the Bloomberg price target. The yearly highs and yearly lows follow. So this is the current price target and this is the Bloomberg price target right here. So guys, these are some of the companies which you can play right now for during the energy crunch, right? So why I'm talking about why it is a strategy, because it is up to the current volatility. If the volatility is on the energy prices, you can try to bet on these energy stocks, right? Again, talk to your risk managers and then go for it. But this is something. So the whole part of strategy is doing things at the right time at the right place. Does it always pays off? Not always, because markets nobody understands. Uh, we can always try and predict and anticipate, and the best we can do. But then you should at least be present and be aware of that particular sector and try to make the most out of it, right? So this is something which we should always try. Uh, if you like this session, please review us on Google. My name is Yogesh. Century Financial is available on Google reviews. Please, if you like this session, if you didn't like the session, whatever your feedback is, I'm ready for a one-on-one session with you whenever you like to. I'm working on Fridays. I'm available on Zoom everywhere. We can always talk about this. Before I end this, on behalf of Century Financial, my team, my family, and everyone, a big word of thanks to anyone who is in the healthcare department, doctors, midwives, first responders, nurses, those who are risking out their lives for us. A big word of thanks on behalf of my family and friends and my team in Century Financial. We hope all of you remain in good health. And I really wish from the bottom of my heart and thank to all of you who are connected to such heroes. So please convey my regards to them. If you are one of them, a big word of thanks from my end. I'll be able to answer any questions if you have now, or you can email it to me on yogesh@century.ae. This is my email ID right here. There are a lot more strategies where I have showed you, but obviously I don't want to bore you more. So just go ahead, email me if you have any questions, or talk to your relationship managers. If you need a demo account, if you need a dummy account, you can take a demo account as well. And we can always do a demo session or trial run. And I can use all these strategies. You can use that in demo and see for yourself that how it works out. So once again, thank you so much. Stay invested, find out new avenues, be more curious. We'll meet next week with the next topic, with something different, and try to talk about it. Thank you so much. My name is Yogesh once again. Thank you for joining. Please review us, and I will be back next week.